RedLine Money. I'm Carolyn Wright, and with the expert help of David Roach of Independent Strategy and Richard Harris of Port Shelter Asset Management, we'll take a weekly delve into the future of the economy by finding out where their red lines lie and what you need to know as an investor. This week we've decided to take a look at trade and sort of the impact of vaccine hesitancy or positivity. If we're trying to be, optimistic about things, I'm seeing it more as hesitancy at the moment. Rates of take-up in the US have dropped to the point where Uber and Lyft are going to give people free rides to go to their appointments any day until July 4th because President Biden wants to increase their current rate of vaccination, which stands at 46%, to 70% by that date. Do you think that's feasible? And what do you think that's going to help him achieve in terms of reinvigorating trade?
Well, first of all, global trade is an amazing thing because, as we know, manufacturing in rich countries has been very strong, has recovered really to pre-COVID levels. But what I didn't know, and there's a lot of things I don't know, was the trade, which is also obviously, if you think about it, mainly of manufactured goods, has recovered also to pre-COVID levels. Now that's a pretty amazing figure. What does this tell you? Well, it probably tells you a number of things. The first thing is to really get a trade boom going so that all these emerging markets which are still lagging get a real shot in the arm. You need to have immunity on a global scale. And that's where the WHO is right, is that you cannot vaccinate a country or rich countries and not vaccinate poor countries because we're dependent for a lot of the input and a lot of trade on these poor countries which have to actually get rid of COVID because otherwise they'll simply breed new variants and they'll come back in container ships.
And some of these poor countries are sitting way below even 1% vaccinated at the moment.
Well, while vaccines are left unused in many other countries. I mean, forgive me for dropping my libertarian skirts for a moment, but actually countries have to come to a situation where if they are going to get vaccines up, they are going to have to put incentives in. And that's not necessarily money incentives. It's that if you want to go on holiday, you must be vaccinated. If you want to go and eat, you must be vaccinated. All of these things were pretty common 40 or 50 years ago. We were poked with more needles than we'd had hot dinners when we were at school. But it seems to have dropped out of the psyche. And I think that we are likely to move in a direction where governments are going to have to say, well, you've got to have a vaccine to do certain things, and that will push the uptake up. And I think, as building on David's analysis of trade, I think that the two are going to go together quite nicely.
Well, I'd like to think that, but there are a couple of other things working against trade, other than vaccines, which are very important. Clearly, India and Brazil have to stop being hothouses of infection if they're going to join international trade, as they were participants. In my mind, things stick out like the Suez Canal.
Right.
You block it and you really nearly bring down international trade. You have a pipeline in the United States.
Colonial pipeline.
Which is aptly named.
Yes.
Okay. You actually have a cyber attack on that by Russian criminals.
Allegedly,
sure. I'll repeat, Russian criminals who, by the way, in their ethics statement, if you go to it, says we will never attack Kazakhstan, Uzbekistan, Tajikistan, or anything in the Russian near abroad. Okay, you have these people.
Yes.
Who can actually leave the US just exiting its lockdown with no petrol for...
And panicking once more, so everybody's
Exactly.
queuing up at the gas
Exactly.
stations to fill up their cars, thinking there's never going to be any more petrol ever again.
And then you have COVID, which destroyed international trade. So what I would say about international trade is that from a security point of view, there is an enormous incentive for people to do less things with long stretched supply lines around the world and more things closer to home. And that's the sort of investment you're going to see, and it's going to weigh actually on the long-term growth rate of international trade.
So it's going to become nationalism a little bit more?
Yes.
we're going to get much more onshoreism. But actually, I think you're right, David, that's obviously going to put some friction into the system. On the other hand, we're in a situation where with automation and robotizing of manufacturing and this sort of thing, it is a lot easier now than it was before. That report that just came out about China's population, that actually China's population is largely stagnant, was generally greeted negatively. But actually, okay, people are getting older, maybe there's a labor force falling off, but we are getting into a situation where we don't need unskilled people anymore. And automation of the industrial sector, I think, is likely to help things quite a bit.
Well, if you say we don't need people anymore, then apart from being in a zero...
You don't need unskilled people.
Well, yeah, but the majority of people are unskilled. Probably the majority of people on this podcast are unskilled.
Speak for yourself.
Yeah, well, certainly the two of us.
But I mean, except for a certain gift to the gab.
You try working that computer.
But I mean, look, the robots thing, there is a clear bit of analysis done by the IMF, I think, which actually shows that robots replace people at an accelerated rate in the 3 years after pandemics, more than during pandemics. There seem to be two reasons. Number one is that companies which are shut down because of pandemics and who have enough cash go on investing because they say, oh, well, now that we can't produce things, we can change the supply chain, and they replace people. That is number one. And number two is, of course, coming out of the pandemic, the skill set that they require has changed. Technology has moved on to some degree. The markets are buying different things than they did before the pandemic. And all of this actually goes together with a greater degree of automation. So the losers out of this are the unskilled. But when I said everybody was unskilled, if you look at the really unskilled people, it's the hordes of people in Africa who have no electricity. How do you work at home? It's not only the unskilled in our societies, it's the unskilled in terms of emerging markets. And again, you come back to this point, well, international trade is bouncing back like manufacturing, but how sustainable is that if actually you are looking at countries who are predominantly unskilled themselves and are replaceable by the robots that you're talking about?
Well, I think in the short term, if labor is plentiful and fairly cheap, then labor will still be used. You know, India, if you go into an office, there are always 10 people hanging around the office waiting to run out for your lunch or something like that. So I think that's likely to continue. So in a sense, maybe what we're likely to see is the developed world going much more automated, needing less labor in that sense. But I think labor will still be important in areas where there's a lot of it and it's cheap. Because actually the demographic figures look as if China's slowing down much more like a developed country, but Africa is still booming, and Africa is going to be the place for population growth. So I think what we're also moving into is this asynchronous world that we started to see with COVID, with some countries being hit by COVID and then easing off as regulations have come in, and then other countries being hit, and their economies are moving and their markets are moving this asynchronous way. So what we're also seeing probably are these different waves occurring that's going to last, I should think, for another 4 to 5 years. So it's quite difficult to
he's cheery, this fellow. Where'd you find him?
I don't know. I've nothing to do with me.
No, but these waves, I mean, it's not necessarily COVID lockdowns, but these waves are likely to continue and cause an effect bouncing on for a number of years yet.
I worry that, like, the way we're going here, you talk about supply chains and we talk about the difference in these markets, that we are going to end up kind of very much almost like silos, that people are going back to, you know, let's do our thing our way and not be reliant on other markets. And we might end up with sort of just separate paths.
Yeah, I think you're going to end up with separate paths for a number of reasons. One is there happens to be, which we haven't discussed, a Cold War going on between China and the rest of the world, and that's not going to get any better. So that's separate paths. Number two is, I think the likelihood is that the risks involved in having long supply chains around the world. So in other words, making your cars or computers in China or your mobile phones and then consuming them in Europe, the risks of that has gone up enormously. The Suez Canal is one reason, COVID is another. We're reminded of cyber attacks, so people will make it at home. And the third reason people will make it at home is we're all going in places which have a choice to choose. We're all going for nice, big, soft, cuddly, kind of teddy bear-like governments, which are huge and lovely and make for a much nicer society. but of course are hopelessly inefficient, which means you actually have to make your own cars and sell your own cars, even if the front wheels fall off within the first 12 months. That's the only way you can keep the burghers employed and happy.
So, what does this mean for investors? Where should they put their money?
I'll tell you, the first thing it means is that supply chain disruptions such as we're seeing, despite the growth in global trade, we are going to see the supply chain disruptions add to inflation. You're already seeing it in PPI in China yesterday, PPI everywhere. It's only a matter of time before moving from a globalized system to a nationalist system puts pressure on prices and creates a secular rise in inflation, which of course the Fed and Mrs. Yellen and all those people are completely blind to. And for investors, that means short bonds, get out of bonds, do what you like, but don't own bonds.
All right, Richard, do you any thoughts?
I couldn't agree more. I think that this magic word transitory, which the Fed has suddenly come up with, that everything's transitory, can't even say it now, very short term, and it'll stop in a little while. Well, I mean, there's absolutely no evidence for that whatsoever. We're seeing inflation already in asset prices. We're seeing all inflation coming through in the supermarkets. We've got a potential surge coming through of spending. All of that's going to lead to more inflation. And I think the investment answer, to my mind, looking out, is on the micro side. You've got to be very careful of your investments, that they're fairly inflation proof. Nothing can be inflation proof, but they've got to be fairly strong. So you've got to look much more at investments. So the day of the ETF is dead. And secondly, on the macro side, when that magic moment comes, David calls it a light bulb moment. I call it sort of the point of market criticality. And everybody suddenly realizes inflation's here and the Fed's got to increase rates. That's when we're going to get the J curve. I cannot see any assets really surviving well in that environment. But I think that those specific areas, technology, areas we're looking at the future, areas which are relatively inflation proofed, they will be the ones to be in as we go down the J curve. And then we'll end up in an inflationary environment where you get hard assets doing well, cash does very badly, where bonds don't do very well, but certain equities do pretty well okay because they keep pace with the inflation.
RedLine Money takes the expertise of David Roach and Richard Harris as they talk markets, prices, bubbles and busts, and some even more interesting topics. David and Richard have nearly a century between them of searching for the red line in bull markets and bear. Hear what the crowd isn't saying about current markets and price moves in the long term and even longer. Back to the Egyptians. See markets as an engineering system, a biological organism, or as the behaviour of subatomic particles. You don't get this anywhere else, and you know it makes sense. I'm your host, Carolyn Wright. Music is by Tim Moore of Pixabay, and RedLine Money is produced in Hong Kong. It's available at redlinemoney.online.